What's in store for India's affordable housing sector? What are the key takeaways for housing finance players? For answers to all this and much more, stay tuned to the Expert Lounge, a podcast brought to you by India Ratings and Research, a Fitch Group company. Because for opinions on risk and credit, India comes to us. Hi, I'm Siddharth Rego and welcome to the Expert Lounge. In today's podcast, I'm joined by Jinay Gala, Associate Director at India Ratings. And Jinay has recently authored a report on the affordable housing space along with his colleague Karan. Jinay, welcome to the podcast and thanks for taking the time for this.
Thanks, Siddharth. Thanks for inviting. Thanks a lot.
So let's just deep dive into today's topic for discussion, Jinay. Jinay, we have seen a lot of headwinds taking place, which are impacting the sector. Say, rising interest rates, the impact of inflation on property prices, so on and so forth. So, given these headwinds which are being seen, how do you see the affordable sector growing in the near to midterm?
Sure. So, if you look at the affordable housing sector, the sector was going through a strong patch during the COVID, largely because of lot of tailwinds for the sector in terms of the interest rates were on the lower side. The affordability was improving because of the property prices staying stagnant.
Right.
And also there was stamp duty waivers in certain states. But having said that, a lot of these are now be turning as a headwind for the sector, where incrementally we see that there would be a pressure on interest rates moving up. Also, the inflation would be impacting the borrowers' cash flow.
Right.
And also you would be seeing that due to the inflation, the cost of construction is also trying to move up. That would be having its own impact on the property prices and could also soften the launches which could come in the sector. And on top of this, the key scheme which largely drive the growth for the sector was CLSS. Now that would also be stopping. So there are multiple headwinds which are building for the sector.
Right.
Having said that, the sector has still seen a growth of around 25% CAGR for last 5 years.
Which is significant.
Which is quite significant in nature. But having said that, last 2 years during the COVID, the growth had moderated to 13%. And we as an India rating have been factoring that the overall growth for the housing finance sector would continue at 13% for FY23. And in that, the affordable category can still grow at 16 to 18%, which is a higher than the industry growth rate. So, yeah.
Thanks for putting things in context, and putting the entire housing sector into context, given the current headwinds. But let's move into certain sector participants. Let's look at the housing finance players, the affordable housing finance players. Do you see the funding environment kind of changing given the rising interest rates?
Yeah, and so the funding is the key crucial part for any of the NBFCs or an HFCs to tie up for the future growth outlook. And if you look at the funding side, the NHB has been quite supportive for funding, where around 25 to 30% of the funding of the book comes from NHB. Having said that, we see this further continuing going forward as there have been larger key player moving out of this segment. We see that funds could get allocated to the existing incumbents into the marketplace.
Right.
And that could also help them to scale up in terms of growth. But having said that, the growth largely would rely on the securitization and also largely on the bank borrowings for catering the sector growth. And we see the incrementally with rising interest rates as capital markets are first to harden up when the interest rates move up.
That's true.
We see the proportion of bank borrowing also would be moving up in the overall funding mix for affordable players.
Interesting, Jinay. Very interesting. And purely with this rising interest rate, there could be some. Do you think there could be some movement within the inventory of these affordable houses? Would there be any moderation?
So yeah, definitely. If you look at the cost metrics for affordable developers, initially pre-COVID, the cost for an affordable project construction cost used to be somewhere around 2,000 to 2,500 rupees per square feet. And if you look at the lot of raw materials have scaled up by around 40 to 50% in last 2 years. So we see that there could be an immediate impact of 20 to 25% on the cost of construction, which could squeeze up the developer margin in affordable housing space. So the focus of many of the players who are funding the affordable borrowers would largely be on plot plus construction, as there could be some slowdown in the inventories coming from the affordable developers. And also the existing launches, existing construction which is going on, there could be some amount of delay or construction risk building up for the players there. So we see incrementally the sector would be more contested in plot plus construction, where a lot of the players would be focusing on, and where we see that could be some amount of margin pressure which could build in because of a heightened competition.
Yeah, so there could be some slowdown and delays in constructions, and could impact the margins of these players.
Yes.
Right. But from a housing finance player standpoint, I mean, they'll probably looking and they'd want to assess, what are the growth pockets going forward. How are you seeing? What's your assessment on this?
So, as an India rating, we did a study on the overall state metrics of each, where each of the players operate. What we have seen is the top. What we did is we took out the top three states, top three players in each state in terms of their branch network, in terms of the AUM concentration, and then we tried to map out with the per capita income of India and where does the state lies in terms of whether it's above national average or it's below national average. And using these three as a matrix, what we have found out is that there are few states which offer a good opportunity for a fourth player to grow in that particular state. States like Maharashtra, states like Rajasthan, Madhya Pradesh, Chhattisgarh, to a certain extent, which could offer a good amount of room for a fourth player to enter and scale up, because the concentration is quite high in that particular state by the top three players. Whereas the states like Maharashtra, Tamil Nadu, Gujarat are quite heavily contested, and where if you see the competitive intensity is quite high. So a fourth player coming in and making a larger room would be quite difficult in that particular market compared to the previous markets which I stated.
Right. No, I mean, thanks for kind of summarizing everything in a nutshell for me. So if if you're a listener, what's the key takeaway? I mean, what I picked up was that previously there were sector tailwinds, which are now becoming sector headwinds. Rising interest rate, impact of inflation, the inflationary impact on property, as well as the halting of the government CLSS schemes. So there could be some impact going on this sector going forward in the medium term. What about in terms of market penetration? How do you see this for the current players, and would there be new entrants?
So we see that currently, if you see, the market is very well contested by top four players in the affordable segment. But what we have seen that many of the new players are entering this segment because large ticket housing financiers are facing challenge in their own space, as they largely contest with the banking side or on the salaried side of the customer, or the self-employed customer with a higher CIBIL score. That is the area where the margins are quite feeble. So many of them would be focusing on affordable space for future growth. Also, on top of that, there are many HFCs which have a very strong parentage and funding advantage. They would also look to scale up over time, and many of them have charted that they would be focusing more on affordable space because this still offers a good risk-adjusted margin compared to any other segment in the housing segment. Yeah.
Interesting, Jinay. This was really helpful, Jinay. And thanks for your time and for sharing your deep insight on the HFC space, affordable housing sector. If you'd like to get a detailed understanding of what Jinay spoke about, you can feel free to use the link shared along with the podcast and review the report which is authored by Jinay Gala along with his colleague Karan Gupta. Might I say it's a really detailed report and will really help put some perspective on the sector. In the meanwhile, I request you to stay tuned to the Expert Lounge. It's a podcast brought to you by India Ratings and Research, a Fitch Group company. Because for opinions on risk and credit, India comes to us.